Hey, welcome back to the channel. I am the Invictus trader, a small trader based out of Edessa. I help people grow their money in the stock market, and I've been doing options trading for the past 4 years. Now, I'm here to share my knowledge with you so that you can trade smarter and build wealth. In today's video, we're going to talk about something that has been making waves in the stock market world: IPOs, or initial public offerings. You've probably heard of them, but do you know what they really are and how you can invest in them? Let's dive right in. Alright, let's start with the basics. What is an IPO? Imagine you're hosting a huge party, and you decide to invite everyone in town. You open up your house, and the first thing you do is sell tickets to get in. That's an IPO, folks. A company, like your favorite tech giant or that startup you've never heard of, decides to throw open its doors to the public for the first time. They offer shares to anyone who wants to buy a piece of the action. These shares are like the tickets to the party, and owning them means you're a part of that company's journey. Before the IPO, the company's shares were like VIP passes, reserved only for founders, investors, and the occasional secret investor. But after the IPO, it's like you can buy in and join the fun. Why do companies go public? Now, why do companies go public in the first place? Simple. They want money, and who doesn't love money? Going public through an IPO is like throwing a giant fundraiser. The company gets a massive influx of cash, which they can use to expand, build new products, pay off debt, or even fund that world domination plan they've been working on in secret. And let's be honest, going public also makes the company look cooler. It's like getting a blue checkmark on Twitter. Suddenly, people take you more seriously. The IPO process. So how does the IPO process actually work? Here's where things get a little more technical. But don't worry, I'll keep it simple. Step 1. The company says, hey, we need some money and some fame. They hire investment banks, think of them as your personal event planners, who set the price of the shares and make sure everything runs smoothly. Step 2. The company files a prospectus with all its juicy details, including its financials, business model, and future plans. It's like a dating profile for the company, and you're the one deciding if you want to swipe right. Step 3. Once all the paperwork is done, the IPO is ready to hit the market. You can start bidding for shares, and if you're lucky, you'll be part of the party. If you're not so lucky, well, better luck next time, my friend. How to invest in an IPO. So you're all pumped up and want to get in on the IPO action, right? Here's how you can do it. Research, research, research. You wouldn't buy a car without checking its reviews, right? The same goes for IPOs. Dive into the company's prospectus. Understand its business, finances, and whether it's actually a good investment or just another shiny object syndrome case. Apply through brokers. To get your hands on IPO shares, you'll need a broker. There are platforms like Zerodha, Upstocks, or Grow that let you apply for IPOs directly. So sign up, do your thing, and get your bids in. Bidding for shares. In an IPO, you're basically bidding for shares. Think of it like a silent auction. If your bid is successful, you get the shares at the offer price. But if you bid too low or too high, well, it might not work out. Remember, you can never be too desperate for shares. Listing day. Once the IPO hits the stock exchange, the fun begins. You can trade the shares like any regular stock. Whether you choose to hold on to them for a while or flip them for a quick profit is up to you. Risks and rewards of investing in IPOs. Now, let's talk about the big question. Is it worth it? Well, IPOs can be a bit like a roller coaster ride. Some IPOs shoot up faster than you can say, "Get me a seatbelt." But others? They crash faster than a bad joke at a comedy show. So yeah, there's risk involved. On the reward side, though, if you catch the right IPO, it could be like winning the lottery. Early investors in companies like Facebook and Google made some serious cash. But don't go in thinking you'll always hit the jackpot. Do your homework, manage your expectations, and remember, just because it's an IPO doesn't mean it's a golden ticket. Conclusion. Alright, folks, that's your crash course on IPOs. Remember, they're a great way for companies to raise capital and for you to get in on the ground floor of potentially amazing businesses. But always remember, do your research, be smart about your bids, and understand the risks involved. That's all for today's video. If you found this info helpful, hit that like button, share with your friends who need an IPO crash course, and don't forget to subscribe for more market insights and trading tips. Drop your thoughts or questions in the comments below. I'd love to hear from you. Until next time, happy investing, and may your portfolio always be green.